Good afternoon, everyone. Welcome to Hit the Bid here on September 28th. This is Ty Robbie here with your Week 39 Market Watch. Today we're going to be running through our charts and seeing what happened across these markets from the last week, as well as being on the lookout for big news events and potential opportunities waiting for us in the week ahead. Let's jump right in here and start with our December live cattle. Last week we saw cattle prices jump out to a hot start. These December live cattle picking up $4 or $5 along the way, while we were seeing some limit up moves in that feeder market. Nice aggressive start to the week by the bulls as they jumped out to a nice move here on heavy volume, pushing up into the 240s. However, over the next couple days, we did see price just kind of run out of gas here, and the bulls just kind of stalled, pushing all the way back down here towards Monday's opening range here on Tuesday and Wednesday. Thursday's action opening up here below that bull pivot there at 236.5, undercutting Monday's opening range and causing all these bulls from early in the week to fold. Really opened the doors to a nice flush down here, moving quickly away from that 236.5 level. We did see buyer support stepping in down here near these prior week's value areas. Bulls continue to be active and aggressive down here in the low 230s. Good support here in all the right places in between our major moving averages, continuing to hold price above this rising 50-day average. At the moment, this 230 level is the level to watch. We do have some good support each time we dip down into this area. However, if we do see price getting accepted down here below 230, could open the door to a nice little flush down here towards 215 to 220, as we do see all of these bulls over the last couple of weeks would start to be taking some heat and start to get underwater. So look out for any breakdowns below 230. However, the big picture uptrend still remains intact. We are seeing good support here late last week on Thursday and Friday's action pushing back up. Bulls want to see this momentum from Friday carry into Monday's session. Early bids above 235 will have this market rallying back towards 236.5. Bulls really need to get a nice break here and close above the 236.5 level to get this market rallying. Above there, we should see this thing push right back up into the 240s, testing that prior week's high and even potentially these prior all-time highs. So look for the bulls to continue to defend the low 230s here. Look for them to stay active and continue putting up the buying pressure here in all these right places. We want to see some good momentum early this week to carry us out of here and continue to put pressure up into that low 240s up to 243.5 there. We want to see the bulls continue to show some good aggressive push up into those highs and keep this ball rolling higher. As we are seeing out here into these spring months, we are seeing most of the strength coming over the last week here in those back months. We did see the bulls making an equal high up here, just falling short on this February contract, while April was pretty close to an equal high here. This 243 to 244 level. Look for these spring contracts to continue building up pressure here. We are seeing some consolidation with these equal highs, so we want to make sure the bulls can continue to push and in those spring months get a nice break there above that 243 to 244 level. Should open the door to a nice second leg breakout here and carry this cattle market back up into even more new all-time highs. Next up, we got our feeder market. Quick note, we are rolling over. We did see volume overtake this October contract in the November contract, so November will be the new front month going forward. We will be reviewing October's action from last week, as it was the last week for it being the front month. So last week we did see that nice rally here. October was probably the weakest of the feeder contracts, as it was probably one of the only ones here that didn't see a limit move there on Monday. We did see price stall here as well over the next couple days. However, Thursday and Friday's action is barely undercutting that early Monday morning opening range, showing good support down here into the 350s. Bulls continue to step in and get aggressive here around the low 350 mark. Good pushback here and a close above that bull pivot, and that 20-day moving average is a good win for the bulls in this feeder market. So we do expect to see the momentum continue to carry higher. We do have this big picture uptrend still favoring the bulls here as well. Look for this market to get some bids above Friday's high, and we will be looking here at the November contract. Our bull pivot here is Friday's high at 355. Early bids above it, and as long as the bulls can continue to keep price above the 20-day average, we should see another run up here into the 360s and test that prior week high, and above that we should see new all-time highs start to print. This feeder market has definitely been where the strength is. are seeing a little bit more aggressive buying activity over here in the feeder market. So wouldn't be surprised to see this market continue to put up pressure here on the 365 to 370 area and lead to a new breakout up there towards that $4 mark. So look for the buyers to continue to get aggressive here. We look out here into these back months, trading down here into the 340s and 330s. A lot of strength out here into those spring 2026 contract months, showing that this market remains bullish out there into next spring. Look for all these prices to continue to rally here as the big picture uptrend remains intact. We do want this feeder market to defend the 342 level, as any closes or offers below 342 here could open the door to a nice little flush down here into the 320 to 330 area. However, the big picture uptrend still favors the bulls, and we expect to see these higher prices as we climb into as we head into the fall. December corn futures up now. Last week had a pretty balanced week. Prices swinging lower early and higher late in the week. Finishing the week just slightly negative. Not a whole lot of excitement here in this market. We did see some good buyer support down here at these moving averages and near the bottom third of this range we've been trading in. Corn prices here on this December contract have kind of been split here between the 415 to 430 area. If we cut this thing into thirds, low end of this range, the bottom third of this range continues to be defended here, as we did see good support here around the 420 mark early in the week, pushing right up there into the top third and seeing prices get rejected there up there near the 430 area and finishing the week at 421. Not a whole lot of excitement here. We're going to keep a neutral bias on this market, as we don't think corn prices are really going to travel very far here at the moment. We'd expect to see this market continue to bounce around here. If the bulls can continue to pick up enough buyer support here at 415 to 420, we could see some pressure put up on the 430 level. But like we preached last week, this market needs to really push up here, fill that gap, and see some acceptance there above 430 to initiate a new uptrend. So until we see that, we will remain neutral on this market, as we expect it to stay pretty close down here in the low $4 range. Also, on the other hand, is any closes down here below 415 could see this market pushing back down here towards the contract lows or $4 marks. So, but in the meantime, look for prices to be pretty sticky in the 415 to 430 range. Next up, we got our crude oil prices. Another market that seems to be pretty sticky around the low 60s here. We did see last week prices opening up early and opening up down here near the low end of the range around the $62 mark, and making a nice easy pass here all the way through the top end of this range, showing some rejection up there at 66, as there was a brief breakout above that prior month high, or the current month high that is. And good rejection there though by the bears, keeping this market respecting this range up here at the mid 60s and the low 60s. Not a whole lot of excitement here. Any offers below 64.66, which was Friday's low, should see this market cut back down here towards the 61.45 to 62 area. If the bulls continue to defend the 61.5 mark, we should see this market just continue to be range bound. We're going to need a clear and a close beyond either one of these pivot lines here to confirm any sort of new trend direction. This market is definitely favoring the downside over the last few years here. If we look at the big picture trends, we can look out here dating back to this prior high back in 2022. This market has just kind of had a slow drift lower, and even though there's been a lot of range bound action, there has just been a slow steady drift down here from the 90s into the $50 to $60 range, continuing to put pressure down here on the $60 mark. This is a pretty comfortable spot for oil, so I don't really expect it to go anywhere in a hurry. That's why I think the range bound market is definitely going to stick here in the near term. So look for the bulls to be aggressive down here near 61.5, and the bears to continue putting in the selling pressure up here around 65 to 66, and see this market continue to trade sideways. Jumping over to the equity indexes now. Last week we did see a little bit of a pullback over the first part of the week. Good support stepping in there on Thursday and Friday, as we did see a little bit of pushback here, and bulls finishing with a decent little rally here on Friday around the 6,700 level. We can see here the NASDAQ also pushing lower throughout Tuesday, Wednesday, and Thursday's action. Good support late with those long wicks down there near those lows, pushing back, and a nice rally here on Friday across all three of these indexes. Looking like we should see this uptrend just continue to grind. Good supportive action down here near the 20-day moving average, like we've seen this market respect ever since the lows back there in April. Ever since that big dip off of, or big bounce off of that Liberation Day breakdown, it's just been a pretty steady grind higher following that 20-day moving average in this market, and no real signs of that changing here. So we should see bulls step in and get aggressive. Any bids above 6,700 early this week should have this market pushing back up towards those all-time highs. Each of these indexes getting above Friday's high should just open the door for this market to continue grinding higher. So, big picture uptrend remains intact. Not much excitement here at the moment in this market, other than just a nice steady uptrend. Stay long and strong. Look for this market to continue pushing it into the year end. Let's jump over and look at some news events in the week ahead. Something we want to keep an eye on is some jobs data that'll be sprinkled in throughout the week. We do have a non-farm employment change on Wednesday and non-farm payrolls on Friday. Those are going to be some big ones the market's going to watch. Also, unemployment rate Friday morning, along with the non-farm payrolls. Jobless claims there on Thursday. So Wednesday, Thursday, Friday, all before the bell in the morning. Pretty important news regarding jobs information. So be on the lookout for a little volatility surrounding there late in the week, as that could be a little bit of excitement there, as that market has really been paying attention to the jobs numbers. But in the meantime, we expect to see this uptrend remain strong and continue pushing up there into those new all-time highs. So that's all we got for you. Thanks for tuning in. We'll catch you guys tomorrow night for closing comments. Have a good night.